Hey everybody, welcome to another edition of Midas Letter RAW. I am here with my good friend and co-host, Edward, the Special Head Mileski. Edward, welcome back to the show!
Always great to be back. Back on the farm.
Good to have you here.
I know some additions, kittens now.
Yeah, we got kittens. Don't have a kitten. We have kittens.
Do they have any mittens?
The kittens have no mittens. You've met Pearl and Dora.
I've met Pearl and Dora, delightful little creatures.
Delightful little creatures, aren't they?
Oh yeah, they are.
Not bad.
8 weeks old.
8 weeks old. Yes, they're
Nice.
cute as little buttons.
Yep.
Anyways, today we have we have Wolf Richter joining us. Wolf Richter is going to give us his 2 cents on the corner the Fed has painted itself into with its non-stop quantitative easing.
Just printing.
Just non-stop.
There's a whir in the printing shop.
Yeah, it's out of control. There's smoke coming from the ears of
Yeah, they
Fed
gotta keep
presidents
this thing
everywhere.
oiled.
We've also got Elias the Spartan Theodorou, mixed martial arts fighter, famous for being the
How
pioneer.
old is this gentleman?
He's 33, I believe.
Okay.
He's got a fight coming up in December. He's one of the only, well, he was the first fighter to get sanctioned by the official bodies of the MMA to be able to use cannabis without having a problem. So, yeah, he's here for a quick conversation about his upcoming fight on December 18th against Brian Baker. And then Tim Maloney joins us. He's the co-founder and CIO of Roundhill Investments. Now, Roundhill Investments is the company that is the management for the Metaverse ETF, trading under the New York Stock Exchange symbol META.
And that just got listed recently.
That's 6 months old. July it got listed.
And is that because of what Zuckerberg's been doing?
No, Zuckerberg came up with the brilliant idea to change Facebook to Meta well after July. That was just recently. So these guys had the symbol Meta for their ETF.
So maybe they inspired them.
Well, these guys are cranking up $250 million of inflows every week at this point. That's the rate they're running at. They've got the Metaverse ETF.
So they're investing in Metaverse type companies.
They have the Metaverse ETF, they have the esports ETF, they have a sports betting ETF, and several others. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. All right, let's jump to some of the audience questions. Logan Smith, what price range do you see both Voxtur and NuRAN at in 1 year? Logan, we are not allowed to make predictions on the prices of publicly traded companies because we're not analysts, and especially since we are conflicted in that we are owners of Voxtur and NuRAN. So making a prediction would be essentially market manipulation. So we won't take that bait. Thank you very much. However, they are our clients. So if the stock prices go up in either company, we stand to make money. They are our clients because we believe in them, but beyond that, I can't make a prediction on the price. Suffice to say, they both seem to be executing on their stated business objectives. If they continue to do so, that normally results in a higher share price, though not always. That's as much as we're going to say on that subject.
Yeah.
Mr. Bombastics wants to know, why don't Voxtur have any social media yet? Do I miss anything? We're their social media and their conscience. No, they haven't got. They don't pay a lot of attention to social media because they're too busy building a billion-dollar company.
When are the next financials coming out?
November 30th is the next financials.
So soon.
Yeah, I think, and they are going to be impressive to say the least, in my opinion. JD wants to know, given inflation data, should we position for a commodity super cycle ahead? Do you think a breakout in precious metals is coming? Also, do you think the move in cannabis is real this time? 3 questions there.
3
questions. I'm going to speak for Ed, if I might, JD, and say that we are of the opinion together collectively that the commodity supercycle has been running now since about the year 2000, but for some quiet periods in that 20-year period, remains intact. And so a breakout in precious metals happened in 2017. Another breakout could be on the horizon, especially if inflation continues to rise, recently reported to be around 6%, The only thing that the Fed can do to tame inflation is to raise interest rates, and that's always good for gold. So yeah, it's completely possible. Is the cannabis move real? It's always real. It's never not real, unless you're talking cryptocurrencies that are completely unreal, but their moves are not. How confusing is that?
Yeah.
S wants to know, what are our thoughts on the Tesla battery cell plant opened in Markham, Ontario in general, and what do you think of Nouveau Monde graphite in Quebec? Tesla will need 45% of each single battery material in graphite for the cathode. S, I'm going to be straight up with you. I think the global demand for lithium-ion batteries is going to taper off in the future because there are new battery formulations coming to market that potentially could disrupt the lithium-ion battery. Lithium-ion battery continues to be plagued by issues of stability resulting in fire hazard. For example, I'm an investor in Graphene Manufacturing Group, one of my core holdings, so I'm conflicted. So consider this advertising. I've already made a ton of money on this company. I think graphene aluminum-ion batteries are going to replace lithium-ion batteries gradually as they mature.
This is the company that just got involved with Bosch.
This is the company that's building a commercial plant in Australia with Robert Bosch, the global
Bosch
giant.
will be doing the building.
Bosch will be doing the building.
Yeah.
Yes, and the battery technology is advancing. Way too soon to tell if it's going to replace lithium-ion batteries in cars, but I have a sense that that's what's going to happen. Annette King wants to know, graphene in vaccines and graphene in batteries. According to Reuters, online reports that COVID-19 vaccines containing graphene oxide are unfounded. Pfizer told Reuters its vaccines do not contain the material. This material is not listed on any of the widely available COVID-19 vaccines worldwide. Annette, stop smoking graphene and get vaccinated. My recommendation. Ron Boltis wants to know, why isn't anyone using silver in batteries the best conductor of electricity? Edward, I'll let you take that one.
It's silver's the cost is too prohibitive.
Yeah, that ain't going to be happening soon.
Not a heartbeat.
Okay, so Rydor wants to know, love the Fed talk. Just wondering, does a statement from the New York Fed apply only to New York? Ryder, no. The statements out of each Fed president, of which there are 9 in 9 different jurisdictions, are typically contradictory, and they never speak as one voice, but everything they say always applies to everywhere, which is to say the Fed is always just trying to talk up the market or talk down interest rates or talk down inflation. Bottom line is you can't trust what they say. They're a bunch of inside traders, as has been revealed this year. They're not to be trusted. Bottom line, full stop. Nun's Knees wants to know, are you able to elaborate more on why tax loss harvesting takes place? Okay, tax loss harvesting. Let's say you have a stock you bought at $1 and you sold it at $2, and so you made 100%. That win is subject to capital gains.
Yes.
To offset the amount owing on your capital gain, you would sell off some stocks that might be under what you paid for them, because those equate to tax write-offs against your capital gain. So the tax loss selling happens at the end of the year for people and different capital pools that make more than they lost. So they'll look to blow out some of their losers so that they can offset the capital gains obligation for their taxable year. Hope that's clear.
Yeah.
Trent Balzer wants to know, what can you tell investors about the lawsuit against Brandon Boddy, the ex-CEO of Agra Ventures, and his CFO, Peter Nguyen? Blatant fraud, and K&D Law has filed a lawsuit in the amount of $186 million. Well, I'd love not to be Brandon Boddy right now. I'd hate to have that chasing me around. But we are going to have the CEO, the new CEO of Agra Ventures on here. We'll let her tell us what's going on and let her opine on that, because we don't actually know anything about it. First I've heard of it. Desimone Gallery, is now the best time to buy cannabis stocks? The best time to buy cannabis stocks, Desimone, would have been in 2014. However, it's too broad and open a question. The cannabis industry and the public companies traded within them, each one is its own animal. You got to look at capital structure. You got to look at the technicals of the company versus the fundamentals of the industry, and each company's fundamentals. Can't really give you an answer to that. But I think
cannabis stocks are going to trade now on fundamentals. All the nervous energy, I think, has been taken out.
Yeah. All right, Anthony Camerati wants to know, how do you sum up 2021 in markets? It has been like a roller coaster. Started off with a bang, with Redditors gathering and shaking up Wall Street by trading GameStop. Then Bitcoin started spinning the charts up and down. Ethereum surprised pretty much everyone with its price hikes. Altcoins started booming like never before. Just think about Doji. Well, and
I think he summed it up.
Do you want to come on the show?
He summed it up quite well. That's what went on.
Yeah, well, I would say that, first of all, there's still, we're only halfway through the last quarter of 2021, so lots could happen yet. Yeah, it's been a hell of a year. I would characterize 2021 as the fantasy year. The Fed has prolonged the fantasy of cryptocurrencies.
Going to be hard to see a year or a period beat the insanity of what we've just seen. So maybe we're presaging a top here.
Yeah. I would say that I look at 2021 and I want to have most of my money out of the market and into real assets, like real estate and gold.
And copper.
And copper, yeah. Yeah, I think you want your exposure to high impact technology stocks to be limited, and I think you want to be ready to sell everything at the first sign of trouble, because we could be sitting on the brink of another major correction in the market a la 2008, especially if the contagion in China gets out of control.
I was going to say, look to China. China's going to be your clue.
Yeah.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment.
Edward, now you know that the Fed is been printing money for quite some time, and also keeping interest rates artificially low. I say artificial because it's by consensus that they decide what the interest rate is.
Right.
It's not really a function of a market. And this is the thing that always makes me laugh, is when mainstream financial commentators say the interest rates are going this way. The interest rates go where the Fed decides they go. Is that not basically the truth?
There was a gentleman on TV, and he said the same thing, a very, very sophisticated investor, and said, look, you can say whatever you want, but the rate is sort of set.
Yeah. Yeah. So this idea that the Feds or the interest rates are somehow a function of market forces, mysterious and unbeknownst to all but the most sophisticated, is complete bullshit. The Fed decides to set the rate, and everything stems from that. Now, with inflation
rearing its ugly head,
the Fed does not decide on commodity prices. So the Fed can use its setting of the interest rate to have an influence on the direction of commodity prices, which underscore the direction of price inflation in all things. So this is the gist of the conversation with our good friend Wolf, is what can the Fed do? Let's let Wolf tell us about that. My next guest is Wolf Richter, publisher of wolfstreet.com. Wolf, welcome back.
Thanks for having me back, James.
You bet. Wolf, I want to start today's discussion with a conversation about the New York Fed put out a statement on November the 3rd, which we have up on the screen here. On November 3rd, the Federal Open Market Committee directed the Open Market Trading Desk at the Federal Reserve Bank of New York to increase the System Open Market Account, or SOMA, holdings of Treasury securities by at least $70 billion per month, and of agency mortgage-backed securities, or MBS, by at least $35 billion per month during the monthly purchase period beginning in mid-November. The FOMC also directed the desk to increase SOMA holdings of Treasury securities by at least $60 billion per month, and of agency mortgage-backed securities by at least $30 billion per month during the monthly purchase period beginning in mid-December. And then it goes on to say the committee judges that similar reductions in the pace of net asset purchases will likely be appropriate each month, and on and on.
Well, I want to point out, James, this is still a gigantic amount of money that they're printing in November and December. I mean, they're reducing it, but it's still gigantic. They need to stop right now. They should have stopped a long time ago. This is insane what they're doing to stimulate, with these kinds of money printing efforts, an economy that's already got over 6% inflation.
Right, which, you're preaching to the converted, as I'm sure I am to you, but, which takes us to the most recent story published on your website by Alex Pollock, one of your contributors, who says that since 2008, monetary policy has cost American savers $4 trillion. And this is the interesting thing, is that people do not apprehend appropriately how much this costs them.
Yes.
And so...
And this has been pointed out many times as actually an economic drawback in addition to the wealth transfer. So, Alex Pollock is talking about the hit to savers, $4 trillion, but that is money that didn't get spent.
Right.
So that's $4 trillion. Savers, they rely, this fixed income retirees especially, they spent their income from interest, and that happened after the financial crisis in 2008 already. That's in part why we have this slow recovery in the economy, because a part of the consumers got whacked by these low interest rates. And they didn't spend. They cut way back. Savers, meaning retirees, cut way back on their spending, and that's consumption. That cranks up the economy, and they didn't have it anymore. They cut back. And so this $4 trillion in interest that should have been paid by the banks to savers, fixed income investors, and it's not just savers, it's bond investors too. They rely on that. And that's another, tens of trillions of dollars right there that doesn't earn any yield anymore. And that money doesn't flow back into the economy as consumption. And that is a real hit to consumption in the overall economy. Mr. Pollock didn't point that out, but that's what I've been saying all along. It's not just a wealth transfer. It's a hit to the economy, to consumer spending, because these people are losing their income.
Sure. And so, a very cynical individual such as myself might say, well, it looks like the Fed has just been printing money to create a smoke screen behind which they can enrich themselves monetarily, but it doesn't flow down into the economy under the guise of the wealth effect, as they state as one of the justifications, because they've already got everything they need. Everybody who's at the receiving end of this giant trough of quantitative easing / creative counterfeiting is they've got everything they need. They can't spend more. They can't buy more. There's no more houses to buy. And it doesn't trickle down into the broader economy. So you've got this incredible paradox. While the rich are getting incredibly richer despite needing nothing, while the poor are growing increasingly poor and having even less. So, all of this, in the meantime, we've got the price rate of inflation, price inflation increasing across commodities, which always sort of presages a more impactful price increase in consumer products, because they're all made out of commodities. So, at this point, again, we come back to this discussion we've been having for the last year, is this a hyperinflationary inflection point of all inflection points, where, in the most conspiracy theorist way, you'd say this is the end of the US dollar as we know it, and that something's got to give. And at the same time as the inflationary prices of everything explodes to the point where we go back to a sort of tribal competition for resources that results in a breakdown in society at large. Do you see that as a realistic potentiality?
Well, the first part of what you said, you just totally nailed it. You just totally nailed it. And in terms of what the Fed is doing, in terms of the consequences, they have pushed this wealth effect dogma to the extreme. And so now we're in a situation where I think there are some possibilities for nonlinear effects, where things sort of spiral out of control. My primary bet is not on that. And, I think there are some weird possibilities out there that could happen. And, but I think what we're getting now is just standard high inflation. We're getting wage increases that keep supporting it. We still have central banks printing money on top of it. We have governments spending borrowed money in very large amounts all around the world. So these are very stimulative actions. And so I think what we're going into, what we're already in, is just a very bizarre environment of shortages and high inflation and high stimulus at the same time. But I don't see hyperinflation as a real possibility. The Fed is sitting on $8 trillion, $8.5 trillion in assets. So it can sell those assets. And if inflation gets out of whack too much, if it really decides to do that, it could sell, $500 billion a month in securities, and that will crash the financial markets. And it would, just saying it would crash the financial markets, and that would instantly halt all of the, or much of the inflationary fuel that is being put into it. So not only would interest rates spike, long-term interest rates would, if the Fed announced it was going to sell $500 billion a month in security, you'll have the 10-year yield go to 6% or 7% in one day. You'll have just a gigantic movement in the bond market, and suddenly nobody's going to buy any houses anymore because they can't afford the mortgage rates that are suddenly at 7, 8, 9%. And so it brings that to a halt. It'll bring investments to a halt. It'll bring consumers are going to be shocked by that. So it brings their spending to a halt. It brings inflation to a halt on the spot. So there is this possibility that if push comes to shove, the Fed could do some pretty radical things with its huge balance sheet that it didn't have access to before. And that's one of maybe the only benefit of a big balance sheet, that you really can unleash it on inflation and bring it to a stop, And so, the question is, how far will the Fed let this inflation go? And this back to the taper, it's reacting way too late. It's reacting timidly. It doesn't want to upset the markets. It doesn't want to upset anything else, and that's not going to help tamp down on inflation. So I see that there's sort of a limit to how crazy inflation can get if the Fed is serious about cracking down on it. And at the same time, the question really is, what will the Fed do? What will the Fed allow to happen? And that has to. We don't have an answer yet. Right now it looks like they're just going to let inflation go and hope it goes away on its own, somehow miraculously. Over the next year or so, and then if it doesn't, it will crack down, and it may crack down a lot sooner than anybody now estimates. If this gets to be too wacky, they're going to crack down, and that there'll be an impact on the markets. This is going to be pretty rough. If the Fed decides inflation has gone too far, it's time to crack down, they're going to get rid of some of the securities on the balance sheet, will bring up long-term interest rates, and they're going to raise short-term interest rates, and markets are going to react very strongly to that.
Yeah, you bet. Well, so it's interesting to me. I think of that, listening to you, as that as an option, a quiver in the, or an arrow in the quiver of the Fed, and I think, well, they're categorizing their $8 trillion in assets is primarily the debt of the Treasury. So, as is the case in the bond market, one party's debt, one party's liability is the other party's asset, which is perverse in its fundamental nature, arguably. But that's just, that's the way the market has evolved and governments have evolved. To me, that's always seemed ludicrous. A liability on one balance sheet should be no more than or less than a liability equal to, if not greater than, the liability on the counterparty's balance sheet, because they have more risk. But that's just me. Who could they sell $500 billion a month to right now? China is sitting on the top 15 property developers in China are all delinquent on bond payments. China is looking at a massive bailout or a massive collapse in their banking housing sector if they decide to do nothing, which has got to have reverberations in European, U.S. markets, because I'm sure there's just a ton of money in those markets. So I wonder how much of an option is that? I mean, because nothing would be worse for them to say, you know what, we're going to solve this inflation problem. We're going to push out $500 billion a month in our bonds off our balance sheet and find that the counterparties have evaporated and nobody can afford to take that on. I mean, that would be the inflection point of all mother inflection points where, you know.
But here's the thing, you've got Wolf Richter sitting here. He is just waiting to grab a 10-year treasury that yields 8%. I mean, I would just jump all over that, as would the rest of the world. You know, if you get a 10-year treasury to yield 10% for the next 10 years, or any treasury that's got 10 years left, a maturity to yield 8% for the next 10 years, that may be, it may not be the buy of the century, but right now it looks like the buy of the century. I mean, it's like when in 1980, 1981, the government sold 30-year treasury securities with interest rates in the high teens. I mean, and nobody wanted to buy them, but people did buy them. So they set on a yield of something like 18% for 30 years in a row. I mean, that was the best investment ever.
Right.
And it was a big risk, because inflation could have spiked from 20% to 25 or 30%, but it didn't. We had Volcker at the Fed, and he cracked down on inflation, and those 30-year treasuries that were sold with these high yields turned out to be fantastic investments. And 5 or 6 years later, or 10 years later, you could sell them for a lot more than you paid for them. So yield is yield fixes things. So if you allow yields to rise, there will be demand. And I mean, that's what you have with junk bonds that yield, of nearly bankrupt companies that yield 20%. Somebody's going to buy it to get that 20% yield, And these are big risks that people are taking to get a big gain. And so with Treasury securities, the government can control its own currency, so it's not going to go bankrupt. It's just a question of what will inflation do. And if I see that the Fed is getting serious and starting to sell a whole bunch of bonds to get this inflation under control, I'm going to buy if the yield's high enough.
Right.
Right. Buy a lot.
Sure. Well, okay, that's an interesting analogy, comparing it to the junk bond market. The risk of buying a 20% corporate bond is that the risk is that you won't get paid, you won't get your 20%, you won't get your face value back. And so, in the case of the United States government, that is something that most people consider unthinkable. It's just not possible. It's unfathomable. But there are other elements out there who think that that's a possibility. That's a potentiality. I mean, huge disruptions seem to be sort of swirling just beneath the geopolitical surface. I mean, you look at what's going on in China. You look at what's going on with Russia and Europe right now. You look at the weather in British Columbia that has cut off the entire city by road, by all 5 highways, 700 road closures, supermarket shelves empty. I mean, you just kind of got to sit back here and say, well, you thought there were supply chain constraints last week, just wait another week. I mean, the convergence of, climate impact acceleration with global I'm going to stick to my guns and say hyperinflationary money creation is, to me, beyond the ability of government to control. I mean, and in many cases, you've said it yourself, the government, although the Fed is not officially the government, but the Fed has lost control of the inflationary horse. It's left the barn. The transitory nature of inflation is revealing itself to be utter poppycock. So, I mean, I love this conversation because as an American, you're sitting there in San Francisco saying if they issue an 8% yield or 6% yield, I'm a buyer. And to me, it's like, I'm a buyer too, but not of U.S. Treasuries. I'm buying, that's going to make me run to gold because to me, the counterparty risk in that transaction is extreme. And so, that's my sort of rebuttal to you, even though it's not really a conclusion in any way, shape, or form. So my question for you is, in that environment, is a U.S. Treasury bond a better buy than an ounce of gold?
Well, the gold, so that's a good question. I mean, that's always a good question because with gold, you're betting on the price. With a treasury, the price is assumed to be fixed as face value. So if you let it mature, if you try to sell it, you get market price. But if you wait till it matures, you get face value. So the price is not what you're betting on. What you're betting on is, mostly, that inflation is not going to kill the purchasing power of that face value. And so if you buy, $10,000 worth of gold and $10,000 worth of treasuries, both are going to be dealt with in terms of purchasing power. So if the price of gold doesn't change and you have 10% inflation over X period, the purchasing power of that gold goes down as well. So the idea is with gold that its price will go up as you get into inflation. So that it won't be worth $10,000 when you sell it after 10% inflation. It'll be worth $12,000 or $20,000 or something. And that's the bet there. With the Treasury securities, you're going to get face value, but you get an income stream all the way along. So if a 10-year Treasury yields 8% a year, you kind of get $10,000 back in yield over the 10-year period. So it probably more. I haven't run the numbers. So you get back more than the face value on yield. So this is always a very good, very important questions for investors to ask themselves. When they and that's why gold and treasuries are not in the same category of investment. I mean, if you really want to diversify, you need to have both. And because the different investment vehicles in terms of income, that's what you look at treasuries for in terms of preservation of capital, those kinds of questions. You would look at gold more trading because you don't really get any income out of gold.
Sure.
So, I think they're both good bets in a high inflationary environment. So a treasury with a high yield, right now the treasuries are shitty bets, I mean, they're yielding 1.6% for 10 years when we have 6% inflation. I mean, you're getting killed with these goddamn things. And, it's a horrible investment. And the only reason why they're still so high in the price and so low in the yield is because the Fed's buying a whole bunch of them right now, and it's got this huge balance sheet of them. But they're terrible. So I would never buy a treasury right now at these yields, But if yield goes up to 8%, and I see inflation meaning if the yield goes to 8%, it's going to crack down on inflation. It's going to have a downward pressure on inflation. So then I'm going to be more confident that we don't get 20 or 30 or 40% inflation, but that it'll edge down over the next few years. And then, 8% will probably sound pretty good to me. But 8% will bring the economy to a halt. I mean, this is the thing, we're going to have a huge, massive recession if the 10-year Treasury yield is at 8% because mortgage rate's going to be at 10%. Nobody can afford a house anymore at 10%.
Right.
Not going to happen, and you can't buy a car or anything. I mean, the whole thing just kind of comes to a halt.
And, never mind the wealth effect. That's the poverty effect.
Yeah, that'd be and the wealth effect will reverse dramatically. So
All right, Wolf. We'll leave it there for now.
Thank you, James.
You bet. Bye for now. Wolf's a pretty smart guy.
Well, regardless of what the tone of the rhetoric is, they're printing more money.
Yeah,
and a lot.
So now with the whole question, they float this question of should we rehire Jerome Powell for another term or should we replace him? And there are pros and cons to both ideas, I understand.
Yeah.
What do you think is going to happen?
Well, right now I probably say they will keep him. But because I think they could replace him.
They've painted him as the dove, right?
He's
So he's not going to raise interest rates. He's not going to do anything to upset the apple cart, though they did announce tapering.
So if they announce someone else, is that because they want someone more hawkish?
Well, this is the thing. But I mean,
they've created the guy anyway.
If the market would have tanked after November 3's Fed announcement that they were going to reduce the rate of quantitative easing, or taper in other words, then they would have replaced him. But since the markets did not crash, they paused briefly, but they did not crash.
No.
I think they're going to keep them.
Yeah.
And as you pointed out earlier, they're playing a dangerous game of chicken with inflation and interest rates. So they want to raise rates as gradually as possible, as you pointed out. So there you have it.
Look, it's going to be interesting, but it's going to end badly. It has to end badly at some point. There's going to be a 2008 type correction.
Financial crisis. Okay, so is it possible that what's happening in China could catalyze the 2008 of the 2020s? Like if there's like something like 12 different property developers who are behind on bond payments. Evergrande just announced that they squeaked by on a bond payment by selling off a bunch of assets. But is it possible that a sort of contagion could erupt from the Chinese situation that would cause a disruption in global markets sufficient to cause a 2008-like crisis?
I think we got to see greater inflation first. Look, who knows? What about the problem with demographics in China? They're talking that not enough people are coming up the pipe here. They need more people. Have more kids.
Have more kids.
I don't know.
Anyways, in the meantime,
it's going to be interesting.
Yeah, it's going to be interesting. In the meantime, our next guest is Elias Theodorou, the Spartan, joins us to talk about his upcoming fight with Brian Baker on Saturday, December 18th. Hey everybody, my next guest is Elias, the Spartan Theodorou. He's back and he's getting ready to fight Brian Baker on Saturday, December the 18th. Elias, how are you?
I'm fantastic. Good to be back.
Elias, as probably the leading ambassador for athletic use of cannabis, you're probably front and center because you are the only sanctioned fighter in the MMA, among other professional sports, to be allowed to use cannabis before, during, and after a bout without any sort of problem. How did you arrive at that goal?
Well, it's been a process, as you would know. Obviously, since the first time we connected and started chatting, it's been a process that's been taking about 5-6 years. It originally started when I was with the UFC, while they were partnered with USADA, which is the United States Anti-Doping Agency. When I became a free agent, I was able to then focus on being an agent of change for cannabis. I came back from the US and went to British Columbia, where I applied for a therapeutic use exemption and was approved for one. I was able to validate it this past year when I won against another formidable opponent for a promotion called Rise Fighting the Stigma, where I, again, validated my therapeutic use exemption, set precedent not only for myself, but also taking that precedent and ran with it to a different commission now in Colorado. So I am both the first sanctioned cannabis athlete in Canada and now the US, and I'm looking to validate it again December 18th to make history not only for myself, but all other athletes. Right
on. I had read some comments that you said that you were planning to just use CBD in the time leading up to a fight. And is that because the use of THC products closer to the fight date has some negative impact on your ability in the ring?
Well, so basically I'm allowed to medicate with cannabis all leading up to the fight. And then the last 24 hours, they want me to, as with any type of, any type of process that a commission does, they don't want you to be inebriated. They don't want you to be under the influence of anything, whether it's alcohol, whether it's cannabis, and that's what kind of my fight has been. To look at cannabis is no different than any other type of medicine. You can't be impaired by the type of first-line medicines, and now cannabis is the same way. So it's not persecuted. I'm not persecuted for using it leading up to my fight. I just got to be 100% clear and ready to kick ass, if you will.
Yeah.
And that's the more important thing.
Yeah, well, it's always struck me as somewhat, interesting to hear that you'd want to use cannabis going into a fight, because anytime I use cannabis, the last thing I want to do is fight. And so I got to think that it's got a physiological effect on your mentality, plus also your physiology leading into those moments. You need to be sort of jacked up. You need to be psychologically prepared. And do you find that if you use THC that inhibits that at all?
No, but again, everybody and every body is different. For me specifically, I use cannabis for the the anti-inflammatory properties, and also the in many ways to help with my neuropathy in regards to the nerve damage that I have throughout my body. I don't know. I think in many ways I kind of go with the flow when I am using cannabis. But again, it's no different than any other type of anti-inflammatory or any other type of first-line medicines that work for other people. Again, what I'm trying to fight is to have cannabis looked at as no different than any other medicine. Obviously, again, everybody and every body is different. Some people, when they medicate or use cannabis recreationally, they're more of a couch surfer than a athletic surfer. But again, every body's different. And for me, more specifically, I use it very much in tune with my athletic side, from, in the gym to, the quote unquote runner's high that, I feel and I recreate every time I, go on for some of my epic runs.
Yeah. Well, I guess that's a good way to tell if you're naturally inclined towards this kind of sport. Is if you get high and you don't want to fight, then you're probably not a fighter. That's my case for sure. Elias, I want to know: has there been any sort of any sort of subtle kind of criticism or subtle kind of has anybody taken shots at you behind your back, innuendo? Is there any kind of sort of background skepticism, condescension out there in your sport?
You know what? I think it's not the case. Cannabis and mixed martial arts have very much a intertwined relationship. If you go back to, the jiu-jitsu, kind of history in regards to both cannabis and jiu-jitsu out in California, and obviously, where I am right now in Las Vegas, it's the mecca of mixed martial arts in many ways, because of the fights and because of the UFC, but it's legal here, and their actual commission removed cannabis as a prohibited substance, where they no longer test for it, right? They use the barometer of, are you impaired? So again, I think in many ways, there might have been some criticisms when I first started doing so, and not only criticisms, but also risks to being more publicly out there. But I think so as MMA, so has the nation, and obviously in Canada, but now even in the US, as majority of the population here believe that cannabis should be legalized. I think in many ways, I might have been just a little bit of ahead of the curve in regards to being a part of the cannabis side of history. I think a lot of those criticisms are kind of going by the wayside.
Sure. So are you aware of other competitors in your sport that have sort of embraced the use of cannabis since you've sort of blazed that trail?
Yeah, well, I think, again, there's been athletes that have been able to utilize the fact that certain commissions have removed testing altogether, right? Florida, Arizona, California, or not California, Las Vegas, like I mentioned. So athletes are able to, medicate and use cannabis there without any fear of persecution for their choices. I just think no one has used the medical approach that I have done, which has its own very important aspect. Like, as different sports, as different commissions start removing cannabis as a prohibited substance that's tested for, I guess the important thing to emphasize is my classification of a therapeutic use exemption, because it is approved by the state and provincial government. It's actually another foundation of medical cannabis rights for athletes. It's the first time a government, via the Athletic Commission, has recognized cannabis as a medicine in professional sports.
Right. Okay, and I want to talk for a second about this NFT idea that is part of the notes I have about you lately. How does that NFT thing work?
Yeah, so basically I'm going to be commemorating the event itself. It's going to be an NFT, like similar how you can buy a fight t-shirt There's going to be both a NFT in regards to the shirt that basically, and obviously the animation that goes along with it, that basically represents, me knocking out cannabis from the prohibited substance in sport. Also, you'll be getting a actual physical T-shirt. So there'll be a signed T-shirt that anyone that purchases one of these, we're probably going to have about 1,000 in circulation. I'm pretty sure we're going to sell it basically on weigh-ins. The last time, kind of leading up to just before once I get weighed in, or that's when essentially my validation of my therapeutic use exemption goes through. It's going to go on sale, and it's going to, again, commemorate the historic aspect of cannabis being legalized in the U.S. And, any type of fan or any type of, person on the movement can own a piece of that history, relating to what I have done as a cannabis athlete, but also more importantly, and more broadly speaking, bigger than myself, knocking out cannabis from the prohibited list in athletics.
Wow, that's amazing. Elias, that's great. I really appreciate your time today. Thanks for the update. Best of luck in your upcoming fight, and I look forward to speaking to you again soon.
Yeah, my pleasure. Always a pleasure.
You bet. Bye for now.
To kick some ass.
Yeah, right on. Bye. So sounds like Elias is doing well as the ambassador for cannabis in the MMA.
So the idea is to smoke it after the fight and let the effects of the herb take away the sort of impact of the fight.
I don't know. I haven't fought and then smoked. In fact, if I try smoking before fighting, I don't want to fight anymore.
Yeah, I know.
Next up, Tim Maloney joins us. He's the co-founder and CIO of the Metaverse ETF, trades on the New York Stock Exchange under the symbol META. Tim Maloney joins me now. He's the co-founder and CIO of Roundhill Investments. Tim, welcome.
Thanks for having me. Excited to be here.
It's a pleasure, Tim. Tim, the main reason we want to talk to you, Roundhill Investments has a series of ETFs across 7 different platforms: Metaverse, esports, sports betting, streaming ETF, pro sports, etc. But I want to talk to you about Metaverse. And mostly I want to talk to you about the Metaverse because against all probability, despite Facebook changing its name to Meta, you have the trading symbol on the NYSE, Meta, which is just a coup of marketing genius of epic proportions. So tell me, did you see this trend coming way before Mark Zuckerberg did? Is that how we got here?
I wish I could say that's the case. I think we got right place, right time with the launching of the Metaverse ETF on a number of fronts. I think for the fund itself, Meta is just the best ticker. We knew that when we set out to launch it. We're working actually with a third party on it, Matthew Ball, who many of your listeners may know. He's kind of a metaverse thought leader, kind of at the forefront. But really, look, we're in the ETF business, and we know that the better the ticker, the better it's kind of sells, and the more people you can reach. So I'm happy to have that ticker. I think it's been right place, right time for us.
For sure. Okay, start with an education, because I don't understand what all the hyperbole is around Metaverse. What is the Metaverse?
Yeah, I think the most interesting thing about the metaverse is in a lot of ways it doesn't exist yet, but that doesn't mean that the elements that will ultimately make up the metaverse in its end state aren't already there and being built. So I think when you look at investing in the metaverse, you really have to break it down into what are the components going to be of the metaverse, and then what companies are building those components. So when you look at how our fund is set up, there's kind of 7 different elements. And I won't get into the dirty details of it, but if you're building those elements with the intention of it serving the metaverse, that's going to be an interesting opportunity to us as the metaverse grows and kind of comes to fruition.
Mm-hmm. So what is meant by metaverse? I don't really understand that basic concept.
Yeah. So I think the best way to think of the metaverse is really as a successor state to the internet, right? And I think ultimately Matthew, who's our partner on this, has kind of authored a lot of the premier kind of thought leadership here. But the idea is, as our lives increasingly go online, the end state, the end result of that will be this kind of online, offline world where everything is kind of interoperable and brought together in one place. And it's not really a place, that's probably not the best way to put it. It's really just the next state of the internet, I think, is the easiest way to think about it. And we're not there yet. That's why it's kind of a hard thing to explain. But that's kind of, we try and find the building blocks and invest in them now.
Yeah, that's interesting. So I guess it's capitalizing on the virtualization of our realities.
Yeah, that could be one way to look at it. I think the easiest, the most tangible aspect of the metaverse to look at right now is probably video games. And that's really one part of what the metaverse will look like. But if you think about something like Fortnite, which, I think everyone at this point has at least heard of, whether they play or whether they have kids who play, they've heard of it, right? Fortnite is a video game, right? People go online and they go online to play against others. But at the end of the day, there are also concerts that take place in Fortnite. Fortnite's a way for younger people often to interact with their friends after school in the way I might have gone on to AOL Instant Messenger. They're going onto Fortnite to play and to interact with each other. And I think that is where you're starting to see the most concrete example of what the metaverse could look like in the future, is kind of the way people interact socially in video games like Fortnite, or Roblox is probably a better example that's maybe a little less well known. So I think that's one place you can look and start to see what we're talking about here.
Sure. Okay, so an ETF in a sector you don't really understand is probably as good a place as any to start. I mean, I would say it's probably the best place to start from an investor's perspective. And the key metric that I'm watching that really tells me that this is not just a flash in the pan, this is a major seismic shift in the investment universe, is the fact that 1 week ago you announced that you had passed $250 million in assets under management, and here it is 7 days later and you're passing $500 million in assets under management. And to me that's just like, wow, 250 million bucks a week. I wish I could do that. So obviously, this is beyond thematic. This is like tulips from this 1700s, except that, who knows where it's going to go. So, like, who are the people putting in the money? Is this a big institutional play at this point, or is this so far just sort of a fringe retail investor sort of obsession?
Sure. So with the caveat that we don't always know where the flows are coming from in the ETF business, it's kind of a part of a feature of the structure. I think it's actually been pretty broad-based. We've begun to see institutions come in and start looking at us more closely as a firm because they have internal demand for this fund. We've also seen a ton of interest from retail, and really it's coming from all over the place. And I think, in my opinion, the metaverse, more than any of our other themes, really has a potential to be kind of more than just a theme in the long run, right? If you think about it as the successor state to the internet, an internet ETF, I mean, that's pretty broad, right? And if you zoom out 10 years from now, I think there's a chance that people could look to the metaverse almost as they do just the internet. In that case, it really is kind of a broader theme, not a sub-theme in a way.
Right. So then the other thing that really piques my interest is your share price performance in the last couple of weeks is stellar. The volume of trading in your ETF is accelerating and increasing dramatically. So then, I don't want to take away any of the attention from your other ETFs, but do the other ETFs in your universe have such sort of performance metrics around them at this point, or is the Meta ETF really exhibiting extraordinary metrics because it's so thematic and timely?
Yeah, look, I think right now, you mentioned Mark and the announcement from Facebook. I think that shined a bigger spotlight on the space and on the investments being made in the space by some of these really powerful, influential companies. And I think what you're seeing from that is a carry-on effect in the individual companies that make up the Metaverse ETF. And I think that's where you're seeing really this jump in performance. Now, when you have a thematic ETF in general, Meta or any of the other ones, if you get a news cycle that's going your way, that's going to impact the underlying companies. And we saw that with our sports betting ETF when we initially launched it, and it had the kind of tide of legalization across the US. And we kind of want to position ourselves with funds that can do that, because the reality is, if it becomes more relevant to the investing public, we want there to be a tool for that group to get exposure. And that's really what these ETFs are meant to do. So right now, yes, the price performance has been great to watch, but at the end of the day, it can come and go with different themes, but the reason is not so much the reason is the investments being made in the space and the broader spotlight being put on those investments.
And so what are the underlying core holdings of the ETF?
Yeah, so you can find them all. The ETF's a very transparent structure. So you can find them all on our website. Some of the bigger holdings, Roblox, NVIDIA, Meta Platforms Inc. is one of the large holdings as well, formerly Facebook, Microsoft. And if you kind of look into it, we break the universe into 7 different categories. So companies that fall into those categories are all kind of eligible. But those are some of the larger holdings as of today.
Very interesting. So the compelling logic in investing in an ETF for investors who are more or less passive investors is that they don't have to be an expert on every company in the sector. They can entrust the research to the managers of an ETF who can give them sector exposure. They won't catch all of the highs of the biggest home runs in the sector, but they also will not experience the blowouts as the companies fall by the wayside who don't quite make it. So then in the case of the Metaverse ETF, where, for example, I don't generally invest in ETFs. I like to research stocks and participate. But when it comes to Metaverse stocks, I don't really even understand, why is Facebook a Metaverse stock? And does that mean it's more than a tech stock? Does that mean, is Metaverse a whole new sector, or is it an extension of tech? So I'm going to look at this ETF as a way to educate myself, because the way it performs is basically going to draw my interest to the holdings in it. So then, does that value proposition remain intact for investors generally who want exposure to the metaverse without necessarily understanding it?
Yeah, I believe so. And generally, when we make a thematic product, that's what we're hoping to do, right? If you want to bet on one of the spaces that we have an ETF in, you can go do your own homework and try to pick the winners. And you may be right and you may be wrong. And I think we want to create products so that you can make that bet on a space and kind of be right whether or not your individual picks are right. Because it'd be a real shame if, for example, with sports betting, you picked sports betting as the trend of the next, 18 months, and you picked 2 single names and they didn't get the right licenses here in the US and they underperformed. You were right, but you have nothing to show for it, right? So if you're able to do that kind of in-depth research and really pick the right names from within a sector, that's always an option, but we try to do that homework for you and give you broad exposure to the theme itself.
Right. Okay. Can you tell me, finally, is the trading and the valuation of metaverse companies and the metaverse itself, is it completely reliant upon the speculative uplift in continuous investors coming into it? Are there any tangible assets in the metaverse?
Well, again, I think if you look at the elements that that are being built now that will form the metaverse over time, yes, there's tangible, right? If you look at companies like Roblox, that is a profitable business that has been around for some time and that has kind of proved its concept as a primarily a gaming business, right? If you look into the payment space, for example, where you have companies like Square, right? Those are real businesses that have already been built. They will serve the metaverse. They will be a part of the metaverse over time. And I think that's a better way to think about it, because these aren't businesses that are still proving their concept. It's just they're going to have to take the concept that they've proven and apply it to the metaverse as it kind of iterates into itself. Right. It's a little confusing. I know that, I think this is the beauty of an ETF for a space like this, right? It's a nebulous concept at this point, and we're in early innings, in my opinion. And it helps to have people who, like our index team, who really know the kind of core elements that are being built beneath the surface that would make up the metaverse.
Sure. All right, Tim, that's a great introduction. I would like to spend more time with you talking about your other ETFs and future segments, but we're out of time today. I really appreciate your participation. Thanks for joining me today.
Thanks for having me, James. Pleasure. Happy to come back.
You bet. Bye for now. So what do you think about the metaverse thing? Quite prescient naming getting the symbol META ahead of Mark Zuckerberg changing the name of Facebook to Meta.
So the question I have is, was Mark inspired by this? How did,
Mark's a robot. He's not a real person, so I don't think inspiration figures into that.
Right. Well, in any event, this fund is attracting a lot of money.
$250 million a week right now.
Yeah, last few weeks, and it's well above the initial price.
Yeah. $17.
Sounds like a
Anyways,
winner.
let's take a look at that chart, why don't we? This is a company, or This is an ETF that is performing well for its investors as enthusiasm for the whole idea of this new meta sector takes on a meta life of its own. All these dates are October 29th, October 28th. So these guys got the symbol meta long before Mark Zuckerberg.
I know, but they must the word must be getting out that Facebook. I'm sure at Facebook, Zuckerberg saying this has got something to do with this.
You know, this looks like a buy in here. Look at this. Would you say this is a buy? It's only up from 14 and change to 16.
But it's not a high beta. It's not going to be something, I don't think. I don't know. You know what? It's moving. Yeah, probably the trend is your friend. It's overbought a bit, but they can stay overbought.
Yeah. Anyways, we'll see about that. That's our show for this week. Hope you enjoyed it. Write us jwest@midasletter.com. If you want us to feature a company, probably best not to leave your comments in the YouTube channel because we haven't looked at the company then. Write us, jwest@midasletter.com, and we'll take a look at the company, and if we like it, even if we don't like it, we might talk about it. Anyways, thanks for watching. We'll hope to see you next week. Bye for now.